In this video, I'm going to be explaining how I built consistency within my trading and how I built the trading model I did around consistency, and as well as some other little niche rules that you might not have looked into just yet. And this is how I personally done it myself. So just keep that in mind. Some people might have a different approach, but this is mine and this is what's worked for me. So I want to start off with the obvious, the model, because not everybody has a trading model. Some people might be trading somebody else's model, etc. So how would you then go about trading? All that's left to do is collect data. Once you've got your trading model, collecting the data is going to be one of the easiest but most time-consuming things that you could ever do. So me personally, I've got 20 years of data on my model, and that is on 3 pairs. That doesn't mean I've done 20 years into the past. All that simply means is I've done from 2020 through to 2025. And that is it. So, I've done 5 years per pair, and then I've got some other years of data that I've collected as well on some different pairs, which does bring it to around 21 years of data. But that will give you the confidence when entering the market. And that is also going to make you more consistent as well. Because if you're not confident, how are you going to consistently make money from the market? Another thing that I wanted to talk about quickly was just this real quick. So if you are building your own model, you don't need to be thinking about the win rate, because the win rate's not actually that important. So as you can see, if you're targeting a 1-to-1, you only need a 50% win rate. Anything above 50%, you are a profitable trader. If you're trading a 1-to-2 risk reward, you only need a 33.33% win rate to be break even. So anything above that, you would be profitable. And obviously, you can read these yourself, so on, so on. But one thing that I will say is everything here you have to test when building your own model. I don't know what that arrow was, but yeah, you need to test every single, 1-to-1, 1-to-2, 1-to-3. You've got to do them all so that you can find out what is the best TP level for your strategy. And that's just me saying win rate doesn't mean everything, because at the end of the day, people think they need to be winning 50% of the time, when in reality, if they're targeting these higher RRs, it's not really necessary. And the last thing that I wanted to say, if you are building your own model, simplicity pays. Like, you don't need to have the best strategy with all these 10 different confluences, because what is it actually going to achieve? 1, you're going to be confused. 2, you're just going to end up stressing out. It's going to be too time consuming when you're looking to enter the market, and you're just going to probably get brain fog when entering the market, because there's just too much going off. My model's simple. We use the EMA for the bias. We simply use a previous session sweep because we were bearish here. Session sweep, first bearish candle, break of candle entry for a 1-to-2, and that is simply it. Keep it that simple. One thing that I've heard people say before is you should be able to write your entire strategy down on a piece of paper, like so. So make sure you can do this if you're building your own strategy. Now, just as important as the data collection and obviously building your own strategy, which we talked about down here, now we need to speak about building that back-end system, because that back-end system is just as important as, any other strategy. It's just as important as the strategy. This picture is a little bit blurry, but pretty much all this is saying is, how am I going to buy my accounts? Am I going to buy 1 account per week? Am I going to buy 4 accounts a week? You have to decide what you're going to do and what's going to work best for you. So some people might buy 1 funded account per week, and they'll do that every single week. Why are they doing that every week? You might be thinking, Ben, that's a waste of money. Why would I keep buying accounts? Why don't I just buy 1 at the start of the year, risk 0.5%, and I'll pass 1 at the end of the year? Because you're slowing your progression down. So how can you speed that up? Buy the accounts weekly. Obviously, if you're in a losing streak, if we just go ahead and look at this data here, we can see that, we had a 4-loss streak here, and then we went on a generational winning streak further down. So if you bought a fresh account here, you might have, blown that, risking 2%. You then bought another fresh account. You've now passed that phase 1 and phase 2. So why would you not do that? So this is something that you also need to look into. What size accounts are you going to buy each week? Are you going to buy a 10K? Are you going to buy a 25K? Or maybe you just want to trade a live capital account. That is completely up to you. So like we've just looked at there, building that backend system will give you higher probabilities and better consistency. So the backend system is definitely needed. So if you need to learn how to build a backend system, you can go over to my Instagram. It'll be in the link in the description. And just drop me a DM and I'll help you build your own backend system for completely free. This is also kind of on the same topic as, obviously, the backend system. But it is just simply having a reinvestment plan. So how are you going to reinvest your money? Let's say you've got a $2,000 payout. This is what I personally do. Divide it by 4. I'd then have $500 a week, which I could then buy 100K per week. Then I'm just basically scaling my capital. I'm now reinvesting all this money into new accounts. Now we pass more funding. We might have had, obviously here, we might have had 100K in funding, but now we've reinvested into more capital, meaning that now we might have 300K in funding because we bought an extra additional 4 accounts. So this is what I'm saying. You can scale so much in this game, but one thing I would say is don't put all your eggs in one basket. Make sure you're going with different firms. Don't just put all your money into one firm. I've had experiences before. I think I had around 80K in funding with somebody called Breakthrough Capital. You'll probably know them. And then they disappeared off of the face of the earth. Now, I had a payout on request with them as well, and then they just disappeared. So that's one thing to keep in mind. Not only that, but if you've got 3 different prop firm accounts with 3 different firms, and let's say the first firm, you have a payout of, let's just say $100 or $1,000, whatever you want to say, gets denied, but your second account, you still have, a $500 payout, and that one gets approved, and maybe this one you had nothing on. But that way, if you get one payout denied, you're still guaranteeing yourself a payout from this second account. So this is my little consistency crash course. Obviously, if some of these things in this video did help you, make sure to drop a like and a comment down below. And I've also got a fully free PDF of the exact same strategy that I trade, and I'll also leave that in the description. Appreciate you all watching, and I'll see you in the next one.